Reserve risk continues to be a key factor in determining the financial strength of insurers. The economic fallout from the COVID-19 era has presented some new challenges within the overall risk landscape, that according to a new AM Best report. I'm John Weber for AM Best TV, and we're joined today by one of the authors of that report, Senior Industry Research Analyst Christopher Graham. And Chris, the pandemic gave way to many economic challenges and shifts, but can you take us through what some might describe as a knock-on effect in terms of data?
Sure, John. Thank you for having me today. Obviously, during the pandemic, there were a lot of economic slowdowns all around. Insurance certainly got hit with that in its own way, in some ways that you might not think of, but immediately. But when you start to analyze it, it makes sense. Obviously, claims got delayed significantly. Courts were closed. So that put a little bit of a longer tail on what's already long-tailed casualty lines. That had the effect of, making it difficult for insurers to estimate their ultimate liabilities in a lot of cases.
Now, litigation continues to be a cost driver in this reserving segment. Chris, what's fueling that increased activity?
We've seen a lot more now of third-party litigation funding, where some outside party pays the plaintiff's attorney's fees. And this has become, I guess, right now, most of it estimates to be about a $17 billion a year industry. It's kind of tough to tell because most of the companies involved with it are privately held. So you don't have public SEC filings on any of this. But it looks to be about $17 billion a year. And the lawyers who are funding this are getting about a 30% return on equity for it. That's going to earn them a lot of money, and they can, any firm can make more money doing that than they can in other financial markets. So it's certainly going to be a while before this slows down, and with that, you get a lot of you get some a good amount of social inflation as well. So where they can push, the attorneys will push for larger cases, and they will, the ones that haven't been resolved yet will hold out longer, waiting to see the results of cases in progress. That only adds to the attorney fees for the insurers as well. So we're seeing not just larger values for case resolution, whether it be by jury or by settlement. It's also showing in the way of defense and cost containment expenses for the insurer. They're paying that much more on their own legal fees on defense. So it's really become social inflation has become a big trigger in all this, and it is playing out now quite a bit for in the reserve development.
Now, the report also references some of the emerging risks that are affecting reserves, specifically in the casualty sector. What can you tell us about those developments?
Well, social inflation is one of them. Economic inflation, of course, plays a big part too. You can look at it at the end of 2020. If what was inflation, through there was like 1.5%, 2%. That was a pretty stable number for almost 3 years. So that allowed insurers to be pretty confident in their reserves. But when inflation spiked in 2021 and 22, what a case that was reserved adequately for $1 million all of a sudden might become 1.1, maybe not as far as 1.1, but $1 million and another 10,000, or $1 million and maybe it did go to $1 million and 100,000, 10% increase. Well, you do that times several thousand open claims, and now you have a major reserve increase. It's not through any fault of the insurers; it's the impact of economic, and then on top of that, social inflation. I think that's one of the biggest risks they have right now. And with that, you start to it starts to affect pricing models. Any good pricing model starts with an adequate reserve study. So now on the casualty lines, how adequate are the reserves? That becomes a bigger question. And then with that, how adequate is the pricing, and who's willing to put in an extra risk load on the pricing is certainly going to affect the insurers. Are they willing to possibly lose market share if they think they need an extra risk load, or are they going to stay in line with the rest of the market to maintain their market share? It's a big challenge right now for the casualty insurers.
Thanks, Chris.
Thank you, John.
That was Senior Industry Research Analyst Christopher Graham. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.